Emerging Asian markets fell sharply on Thursday as renewed escalation fears in the Middle East unsettled investors after US President Donald Trump warned Washington could continue striking Iran, dampening hopes for a quick end to the conflict. Regional equities and currencies retreated after Trump, in a primetime address, said the United States would hit Iran extremely hard within weeks, adding that military objectives were close to being achieved but offering no clear timeline for ending the war. The remark triggered fresh caution among investors who had previously positioned for a near-term resolution. The MSCI index of emerging Asian equities dropped 2.3%, while the region's currency gauge eased 0.2%. South Korea's KOSPI plunged 4.2% after earlier gains as much as 1.8%, reflecting a rapidly shifting sentiment. Analysts said markets were reacting to growing uncertainty over how long the conflict would last and the economic pressures already building across the region. Prolonged tensions threaten economies heavily dependent on oil imports, particularly as fuel shipments through the Strait of Hormuz continue to arrive only selectively. Across Southeast Asia, Singapore's shares reversed early gains to fall 0.8%. Malaysia benchmark index declined 1%, while equities in Indonesia and Taiwan dropped around 1% and 1.4% respectively. Indian markets also tracked regional weakness, with the Nifty 50 and BSE Sensex falling 1.95% in the morning trade. Oil prices surged following Trump's remarks, with Brent crude jumping about 5%, intensifying concerns over inflation, widening trade deficits, and slower economic growth in energy importing countries. The dollar index rose 0.4% as investors sought safer assets. Currency markets reflected similar stress. The Philippine peso slid as much as 0.7% to 60.614 per dollar, while the South Korean won weakened past the 1,520 level, remaining the region's most pressured currency. Indonesia's rupiah fell 0.2%, reversing earlier gains amid ongoing concerns over fiscal deficits, central bank autonomy, and governance issues. The Malaysian ringgit and Taiwan dollar were comparatively stable, while the Indian rupee strengthened to 93.53 per dollar in earlier trade after support measures by the central bank. Bond markets also reacted, with Japanese government bonds yieldings rising after fading expectations of a swift resolution hurt demand at the auction of a benchmark of 10-year securities. In China, mainland and Hong Kong stocks declined as investor sentiment weakened. The Shanghai Composite fell 0.53% and the CSI 300 dropped 0.74% by midday, while Hong Kong's Hang Seng Index lost 1.1% and the Hang Seng Tech Index fell 2.2%. Semiconductor shares were among the hardest hit as reduced risk appetite weighed on technology stocks. Market participants said the uncertainty surrounding the reopening of the Strait of Hormuz remained the key concern, with escalating rhetoric suggesting the conflict could persist longer than investors had anticipated. With geopolitical risk intensifying and energy prices rising, emerging Asian markets remain vulnerable to further volatility as investors closely watch developments in the Middle East and their broader economic fallout.